That 30-second countdown music reminds me of like waiting in line at like the zoo or like a Space Mountain at Disney or something like that. Just like that. I don't know. It's got a good beat to it, but it's all electronic. But I
Yeah.
like EDM. So
Somehow with all 30 seconds, I decided that I think I could beat it by taking a drink of my water real quick, and I'm still caught on camera by it, but
I,
whatever.
we caught you. We caught you.
Cool, cool, man. What's going on?
Not much. Welcome everyone. Back to Chicago, Chicago Landlord Secrets. You got Tim Harstead here from Chicago Style Management, and myself from GC Realty Development. We got a bunch of people that watched this after the recording last week, which is pretty cool. I got a few people that reached out. I'm not sure if you had anyone, Tim, but I had a few people reach out questions, and a few people reach out just to say thank you. So, hey, someone says thank you or they like it, I'm in, and it gets me through to do it another week, right?
Yeah, it's funny, like especially in a world where you see views and you see that people are doing YouTube and have millions of views, and when we only have a few hundred, but when it actually affects someone and actually they get the advice they need to that you can't find at a national level, right? We're talking about stuff specific to Chicagoland, to the suburbs, to the city, to all that. That it just if you're trying to watch something like Bigger Pockets, you're just not going to get in depth with the right information because Chicago is so unique compared to other places. I think um, that it's huge. So I love the feedback too.
Yeah, definitely. I love. I mean, that's why we started Straight Up Chicago Investor. Was we tried to be a very localized version of Bigger Pockets, but at the same time, for me, I just know I've made so many mistakes in my career that I want to share. My whole goal is to share that with people. And the one-to-one, you can only talk to so many people at a time. So you got to get on here, and we have this awesome thing, the internet, that we didn't have 30 years ago, and we get the opportunity to throw it out there in the universe and see who picks it up. So thank you for anyone that's listening or following us so far. We'll keep coming on here and talking about it. If anything, Tim entertains me for a half hour a week, and that works for me too. So
Cool, cool. So you talk about mistakes, you talked about things like that. Actually, I'll start with this if you're okay with it. But I had a client ask me the other day, and when we talked about it for a good half hour, we don't have to go that in depth, but I think it's a good thing for investors to hear how to sort of rate their investment, right? I think a lot of people use ROI. The other term that gets thrown around that I like better is return on equity, ROI, return on investment, ROE, return on equity. If you're an investor, which I know you are, how do you sort of look at, or how do you talk to your clients and sort of grade their investment on, hey, this is doing really well, or hey, you bought a lemon?
well, I think the lemon conversation comes up, when you just see an ungodly amount of work and you don't see it stopping because you realize the building's built shitty, and the last guy did a whole bunch of bad stuff. So I think those lemons do come up, and I call those dog properties. But for me, what I've experienced is everyone invests for such different reasons, including myself. I know early on in my career, it was all about cash flow. And that's how I ended up on the South Side, because that was sexy paper returns look so great. Ultimately, all said and done, many years later, it was only single digit, but that was what attracted me. And now it's like, all right, so now we need something to offset some taxes, and I'm more about slow, stable, hold and grow. But if you're my PM, or if I'm my own PM, like, my cash flow is not that great. So if I guess limiting my maintenance and keeping my tenants longer is really how I grade it. Because I I think when you buy the property, how much money you got to put into it is really the game changer. So anyone that's out there doing the burr, and if you're able to leave in only $15,000 on a few $100,000 investment, I don't know, just the rate just really becomes so much less important. Short of, maybe it comes down to then how much money you got to put into it. But I'm curious to hear how you kind of break it down.
Yeah. So a couple things. I think you touched on a good point. Is one of the things I think that going back to the being in the world that we're in with social media and stuff. You see all these guys, the national level, and even the local level. I won't call anyone out, but like you hear them talk about, oh, I own $20 million in real estate, and okay, well, why are you still working a 9 to 5? Why, like, like it, I think where you start from has a big, and this is why it's hard to say, look at cash flow and are you cash flowing, et cetera, because if I buy a $1 million building with $1 million cash, I'm going to cash flow a lot better than if you put 200 grand down. And I think people try to compare the two, this investor's cash flowing, 30 grand a month. Well, yeah, but he has $1 million property paid off or $2 million property paid off versus a new person getting into real estate and not including the mortgage pay down, first of all, as part of it. That's a huge one is to take that into consideration is you're paying down your mortgage. That's all profit. The interest isn't, but the actual principal being paid down is pure profit that I think a lot of people don't look into. And then the other thing I wanted that I brought up with my client that when we were talking is return on equity. I don't think a lot of people look at it enough. Return on investments one that I think everyone knows. If you put 20 grand down and you make 5 grand, you made 25%. But what happens with equity is if you sold the building right now, if you sold the building right now, how much money would you have to go buy something else? Right, that's your equity, and take that number against your returns because that's going to tell you if there's a better opportunity. Because sometimes you could buy a great property, but it's going to get to a point where it's paid off, where it's the market has increased as much as it's going to increase. So you're only getting smaller 3 to 5% increases annually, which is great for most people, but some people are chasing a little bigger numbers. There's a time where if you have $200,000, $300,000 in equity and you only put down 20 grand, you can go buy something with 320 grand down that's going to return a lot more. So I think that's a number a lot of people don't take into account that's super important for an investor.
Yeah, I agree. I get what's the right word? I get nervous when you get this a lot probably in your market, but when people are like, "Oh, I just want to buy, I need cash, I want cash flow, and I want to," the myth of replacing your 9 to 5 with cash flow is really really tough to play out in reality. And I think what I turned 45 tomorrow, so I've been thinking about a lot of mature things lately. But where I've or what I think is mature, as I've grown in my mind, it's like as I'm investing now, it's really more about what that does to the net worth, I guess, for me. And
Mm-hmm.
I, for instance, bought a property recently with a partner, and in out in the suburbs here, and we probably have 20, 30 grand into it. Next year, we have with doing the cost segregation, we'll have about 60,000 in write-offs for taxes, and we have about 150,000. It's about 180,000 in equity between the two of us. I split it, but my cash flow is only a few $100s a month or $200 a month on this. So the cash flow is not sexy. Now, for me, if something breaks or I have to come out of pocket for a month or two or whatever, like I got the means to do that these days. But back in the day, if I was only focusing on cash flow, then like sometimes coming out of pocket would puts people into a tailspin, or they can't do it, or they start thinking like, oh no, it's not working. I think cash flow isn't always a linear line either, where you put it on paper and you're gonna get this much a month. I think you have good years, you have bad years, and the bad years you might have to come out of pocket, hoping the good years make up for it. So the cash flow investing mindset only is really dangerous. And I think you've talked about a hell of a lot more than you just did today. Is just all the different ways to make money, and that's why I try to take that conversation when people start talking about returns and cash.
Let's talk a little more about the depreciation part. So you said you got to write off 60 grand, right? And this is where I think that real estate is the line I like to use. It is the greatest wealth builder out there. It's an okay wealth creator. Like I think the people that have more success are the people that have a little bit of money and then they go into real estate. And not to say that you can't start off in real estate and then become rich, but you have to understand that you're going to go through some shitty years. Like you're going to go through a 10-year stretch where you're not really making money. You're just trying to accumulate that wealth to be able to cash flow eventually or pay it off and then cash flow. But if you're a real estate professional or you have a wife or a husband that is, and you're able to write off, like you said, you're getting a 60 grand write off, which equates somewhere between 20 and 16 and 24, depending on the tax rate that you're writing off on. Grand a year, that's way more than what most people are cash flowing. And I think that's something that's huge to look at, that people need to understand that part of it. And then the other part is the equity that you're building. I think I bought I bought Bitcoin 3 weeks ago because I'm the smartest person alive. If you don't follow it, we have a friend Jared who's a huge Bitcoin guy, but something happened the last 2 weeks and it's down like 30%. I think what actually happens, I just bought it. That's just just how that works. Is I bought it, but when you buy stocks or Bitcoin, you look at the value, every week, every month, every year, whatever, depending on what you're at or what you're buying it for. I don't think people do that in real estate enough. I think that if people looked at the value of the home they bought 5 years ago and saw it today and accounted for that, the amount that they have that they've actually earned is far superior in equity than it is in cash flow.
I know investors that do this on a monthly basis, and I don't. I only do it whenever the bank asks me for it. But to do a personal financial sheet, which usually has your global, which is basically called a spreadsheet of all your properties, how much you owe, what your equity is, and all that stuff. That's a huge motivator every time I actually go through that exercise. So I always encourage, even though I don't do it myself, I always encourage people that are trying to build something like you're saying to track those things because ultimately, in the day, what makes you more bankable isn't necessarily your cash flow. They're not really looking at your cash flow. They're looking at, hey, if something goes wrong, how much equity does this guy have, or how much assets does this guy have? And that's the super valuable thing for all investors listening that you really want to get to. I had another point I was going to make that I totally forgot. But yeah, that's so along the lines of what you were saying. I think that's the case. And I heard this. I figured this out one time. It was based on the interest rates being like 6.5. I forgot how it made, but even if you're a couple $100 negative on pay on in real life, on paper you end up being like $200 ahead of the game with write-offs and principal pay down and all that stuff. I forgot the exact parameters, but breaking even on your month to month out of pocket, you're still ahead of the game when it comes to all the other benefits.
Yeah, no, 100%. I think to your point, like you don't have to. I don't look at my 401k every day or every month. Even you look at it once a year, etc. But I think it's good to look at when you're starting to doubt yourself, or when you're starting to, especially when you're newer in real estate and you've only been investing for 5, 10 years, or one or two even. A lot of times you look at your bank account and you go, "What am I doing?" I spent 30 grand on a roof last week, and I'm only collecting 1,200 in rent, and my mortgage is 1,000, and I'm not making that 20 grand back, and it gets really discouraging. So I think doing something like that, like what do you call it, a financial sheet?
A global statement, or a PFS, personal financial statement, or it's kind of you got this spreadsheet for the global. That's your breakdown of your properties.
Yeah, I think doing that just to remind yourself where you're at, and sort of, this can be a long road and it can be a daunting road, especially if you're trying to manage it yourself and dealing with all the literal shit and toilets and tenants and all that. It's a super long road, and if you don't see the encouragement and get the dopamine hit of, oh shit, my house went up 100 grand over the last 5 years. It's hard. It's hard to stick with it, and too often I see people try to sell way too early, and it's like, if you would have just held on to it for 5 years, you would have been in a great spot.
I don't care what it was 15 years ago, but the best properties I own today are the ones that I have for 15 years. So, and here I do check my Bitcoin 2, 3, 4 times a day because it's like, it's awesome that it's on all day. Like I started investing in Bitcoin mostly because of Jared also. More so like this is my gambling money. And if,
Yeah.
I became a bigger believer in Bitcoin, but yeah, whenever it goes down, like it did last week, I text Jared, like, just want to make sure today, and he sends me a screenshot of everything you paid like that day, and his wife's mad at him, and like so I go right back to the buy mode. So I'm in my goal is to get to 1 Bitcoin, just a kind of good round number, and then hopefully it goes up, and I'll sell at some point. So
Yeah, no, you will though. And that's the thing with stocks and all that stuff, and even the housing market in '08 when it crashed. If you hold on to it long enough, it will come back. It's not going to go away unless you have a house that's like literally deteriorating. The value is going to come back, and even if you did buy wrong or something is hurting the situation right now with your property, your mortgage is going to the principal part is going to stay the same. Assuming you have a fixed mortgage, your interest and principal is always going to be the same. Rent goes up every year. So as long as you're keeping up with the property tax increases, which Chicago has definitely made that harder and harder each year. But as long as you're keeping up with that, you should be increasing every year. You should be increasing your rent and decreasing, your cash flow should get bigger. So when you get to that 15-year mark, that 30-year mark, and it's paid off, it's just huge. It's the cash flow is far better than when you have a mortgage.
In the words of Tom Shellcross, time is your biggest asset, is your
Mm-hmm.
greatest asset. So, all right, bouncing around here. I saw something online. You had a video on there of pipe break. Tell me, what was that story? I saw that the other day, I think, at TikTok. I
Yeah,
saw a bunch of water running in a really
bunch of
shitty
water. Yeah.
kitchen.
So unfortunately, and this is what we talked about, right? It's when it warms up. Fake spring is here, or at least in the next few days. I'll be in shorts and the hard freeze is over. So this one, the thermostat batteries ran out. So it was fine. We do like a weekly check on vacants and everything, and it was fine. And then went through the weekend, and we came back and found that the thermostat decided to go out and not kick on the furnace at all for that weekend. So we walked in. Luckily, depending on how you want to look at it was a vacant property that we were actually coming in, Monday morning to start painting and start getting it ready for the market. Um, and yeah, a pipe in between the ceiling and all that started going. So got it cleaned out. That unfortunately is going to be an insurance claim. But it will, overall, it won't, the turn will now not be as expensive now because we have to rip, instead of just painting walls, we got to rip them all out, and the insurance is probably going to have to pay for it. So there's good and bad to it if you want to look at a silver lining, but it sucks. But these are the things that happen, and that, that's why you need insurance.
Now, will you recommend, or is it too small to get like a private adjuster, or was a public adjuster to
Plug
represent?
adjuster.
Yeah.
We This one's probably too small. For bigger things like fires and things like that, where we think it's a total loss, the public adjusters are great. We've gotten clients to be able to get money like above what we'll bid it out to three contractors, etc. And we can get the public adjuster to get a payment at the higher one and still get good work done at the lower one and get a little bit of a spread there, even after paying the public adjuster. Um, so generally speaking, if it's bigger, yes. If it's something smaller, like I think this is probably a $20,000-$30,000 claim. Um, by the time you pay the public adjuster, now you're like, there's less wiggle rooms. Even if you get three bids, or whatever it is, there's a little bit less wiggle room there to be able to pay their fee and go from there. But what's your opinion on smaller ones like that?
Well, for anyone listening, I'll explain real fast. If you have an insurance event, you call up your insurance company, file a claim. It's you versus the insurance company, and to hire a public adjuster, they'll come in and represent you as an insuree, and they do it for a fee, and their fee is usually a percentage, 6 to 10% of whatever the claim is going to be. So if you have a fire at your building, or just say this Tim's flood was 100 grand, they'll come in, they'll charge you 6 to 10 grand. But their whole goal is to look at your insurance policy and truly make sure you get every dollar amount. Your insurance company might say, your building's 100 years old, we're going to depreciate all of your kitchen by the full amount. It can be depreciated, which gives you very little coverage. But your insurance guy would say, no, this was rehabbed a year ago, and here are the pictures. You need to give me the full amount. So their whole goal is to hopefully pay for themselves. Use them dozens of times. We actually just got Alpha adjusting as someone on Builder Team for Straight Up Chicago Investor. But we used him, we refer him out. Used a couple other, I'm drawing the blank on the name, Mike over on Western. But there's only a handful of them in the city, and for your bigger claims, they're big. And sometimes we've had, unfortunately, over the years, a couple $100,000 claims where it's been super valuable to have them. It's someone on your side.
Yep. So I actually that's Dorian, right? Alpha.
Yeah. Yep. Dorian.
So he'll actually be, if you guys ever hop onto the Chicago Style pod or our podcast, the housing provider show on YouTube under Chicago Style Management. He's actually we recorded a while ago, but he's our next guest. So that's a fun episode. He's
what a small world. Yeah. Dorian's awesome.
Yeah. So that'll be hopefully published. Unfortunately, we had a little bit of an issue with him and getting on the computer and getting on the screen. So we had a little bit editing to do to get his mic up levels up, but the show was so good we had to get it out, so we put the extra work in. So hopefully it's here in the next week or two. We have it to premiere.
Yeah, we had him in person on the podcast. It was the one episode I did by myself without Tom because Tom thought it was a Zoom episode. Dorian showed up at the office and I ended up recording doing flew solo on that one. So, but yeah, no, he's great. He just joined.
He can hold the conversation. So he's a fun guy. He can help you hold the conversation.
He's very he's Chicago. He's an investor himself. Like that, you know, he knows the old buildings. He grew up in the city, so he'll be a great episode. I'm sure that you'll have. So I look forward to listening to that.
Yeah, for sure.
What do you? I got a question for you. You know, when it comes to city violations, you call it the administrative ones. The you know, the trash in the backyard, or maybe the overgrown, just kind of the many small pain in the ass ones. Like, do you contest all those, or how do you handle those when you get those in the mail?
So we have an attorney that we work with for both the big and the small ones. So you know, we get a preferred rate and everything like that. But really, what it comes down to, a lot of time, like we'll look at it and see if we have a chance to contest it. For instance, the one that we contested, and here's to my point, right? We probably wouldn't even have paid an attorney to contest this, except there was 3 tickets all on one, so it was like an $1,800 fine. But if we pay an attorney $300, and you know it's a $300 fine, even if he wins, there's no point. So sometimes you just eat it because it's not worth spending money to fight it. But like, you know, we had one the other. This was 6 months ago. This is my one of my favorite stories of how bad the city of Chicago is. We got a ticket for a garbage truck being in the alley for too long.
How is that even possible?
They said there was a truck sitting in the alley behind our building, and they wrote us a ticket because it sat there too long.
Oh,
and then we look up the photos, and it's literally the city of Chicago dumps like garbage, like picking up garbage. Like the dude, I don't know if he took a nap or what he decided to do, but for some reason, the city guy decided that he was going to write us a ticket because he was sitting there too long, which is a ticketable offense. Like if you have a pickup truck and you just put it in the alley in front of your garage, the city will write you a ticket all day long. And I understand that, but this one was just hilarious. And the attorney's like, yeah, the city's attorney, you know, turns to him and goes, "What do you have?" And he's like, "This is what the ticket's for. Can you even explain how this is written?" And she's like, "No," and just like, it's done. It wasn't even an argument. It was just like, "No, you're good." So,
but correct me if I'm wrong, they still charge you an administrative fee if you go into court and you have to have it in front of the administrative judge, right? Isn't there still some like court fee that even if you get it removed? Or is that only if you get found guilty?
I think it's only if you get found guilty that you have to pay the extra.
So if you go there, you do contest it, you get found guilty, you still then have to pay. It used to be 40. It might have gone up since then, but it used to be a $40 administrative fee then on top of that.
Yeah. I'll say this. Our attorney can usually get things cut in half. You know, and say, hey, it's a one-time thing. Let's give a little grace, you know, etc. And we can usually finagle our way into getting it cut in half. But again, if you have a $600 fine, you're going to pay $300 and then pay him $300. That doesn't do much. But once you start getting a $2,000, $3,000, $4,000 in fines, that's when we'll contest it and pay for him to go and try to cut him down.
You know what sucks is they take pictures of the violation, but they don't share that with you. And the only way you get to see that is if you're actually in court, which I feel is like, because a lot of times we've gotten reduced or removed a lot of times because it wasn't even our property. It was the vacant lot next door that had the garbage on it, and they just tagged our address but they have pictures, and if they share those pictures with you, you'd be able to know faster. And I'm not sure if that's part of the game, right? But like that is a crappy part.
They generally do put them on the website, so you can get them on the website. But to your point, they're extremely slow at putting them there. So
where do you go for that? Like, is that just on maybe share that with us?
It's almost like if you ever had one if you ever get like a city, like a speeding ticket from one of the
red
cameras,
light camera. Yeah, unfortunately, I've had a lot of those.
It's pretty much the same thing, but on their site. Let me see if I can find one, and I'll share it with everyone. But if you want to move, if you want to talk more on it or ask me another question
Well,
as I look
one
for
thing that I will say that a lot of people don't realize is, and this is a good tip, you probably know this, but if you miss court, if you say you get a violation and maybe you knew the date was Tuesday the 21st, but you missed it, and or you get it a week after court, which is not uncommon either. You have up to 21 days to call it back to court. So you go in there and
Mhm.
you do. It's like a callback or something like that. You can just go in there as yourself. You wait in line outside of the desk there, and you could call it and get a new date. So a lot of people think that just because they missed the date, they can do that. Now, unfortunately, tenants can do the same thing on the eviction side of things, which screws up that process. But you, as the owner, do have the right, if you miss court or maybe you're just too damn busy that day and you just couldn't make it, you can always go in and call it back. I think it's free the first time.
Yeah. Um, yeah, and we've done it a lot of times because I don't know about you. I mean, you're in the suburbs, so it may be a little bit different. Our office is in Bridgeport. Our mail person sucks. There's been time when we don't get the mail for a month after it's supposed to be. Um,
Is that the mail or is that the
so
city self-stamping something that goes out weeks later?
it could be either one, but I've also gotten Christmas cards that were sent to my office like a month late. So I'm gonna assume it's more the mail person. I've also haven't seen the same mail person more than 2 days in a row in the last like 2 years. It's crazy. Um, yeah, it's
That's a
I
whole
don't know
nother topic. I
the
don't
whole
know how
thing
our
is the whole situation, and then you'll get some. The worst is to me though too because they do that. They'll send out they'll give you a violation that your grass was too high in June and you don't get it till October. Well, how am I supposed to go get a photo of my grass in June? That's where that's what I get annoyed by. How can I fight this? How can I show you? Because I can't go back 6 months. I didn't know you wrote me a ticket to get a photo to say that this is wrong.
now I know I have these conversations with myself and sometimes clients even. It's like sometimes it's just this ends up being the stupid pains of just cost of doing business. The $300 fine, it's not worth fighting. Just send it in, and just get it done with, and hope it doesn't. I hope we don't get this again. We checked the alley. There's nothing back there. I don't know. I don't know. They caught you on a garbage day or whatnot, but it just might be a stupid cost of doing business.
Yep. Yeah. And I think Chicago, unfortunately, it becomes just something that you write off and you say, okay, it is what it is.
Gotcha. Was it you or somebody else that gave me the link to the garbage days, or what day the garbage company comes?
Probably someone else might have been.
Oh, I'll throw that in the comments. But it's been a great tool we've been using around the office. Is you can see what day recycling or what day garbage pickup is depending on your block. So like it's a whole website for the entire city, which is pretty cool.
Nice. That works.
You're still looking for that on there, aren't you?
I am. I The problem is half of my emails. So going back to it, the crazy thing is they. Okay, that's. I'll get it and I'll put it in the comments on the videos on YouTube and Facebook for everyone. Um, like half of the stuff I have is not even the city letter because it's so unhelpful that I'll just go online and download from their website the actual violations. Um, and go from there. I finally found one. I'm trying to see if it's on here or not. But generally speaking, when they send you the letter, you're gonna get the docket number, and then there's a site that you can go to and look up the photos from with that docket number. And then, like I said, I'll add that afterwards.
All right. So what's going on, man? What else going on in your world?
Update from last week. We went to the police station for those that weren't watching or haven't watched last week's. We got a call from the police station over in one of the buildings that we manage that has squatters, saying that they know that the neighbors called about squatters breaking in, etc., and to bring the deed to the thing, to the office or whatever. And we went down there, and they basically told us to go file eviction. So we're back. Apparently, unless you can get ABC 7 to come out and do a report on you, there's no way. I found another article about a house in LaGrange, the suburb here, that's having the same issue. So it's not just the city of Chicago; it's pretty much all of Cook County is still having major issues getting anyone to actually enforce these.
Wow, that's
So
crazy. So Lagrange, you heard this happen even too, huh?
yeah, LaGrange, Fox News, I think, did a story on LaGrange. Um, everyone like it's a house that got broken into and they can't get back, and they're the neighbors hate it because they're basically selling drugs out of it and doing all this stuff, and
Oh,
neighbors keep
I
calling
think
the
I
cops. And
Yep, I
yeah,
saw that. It was the neighbor basically saying, "Hey, it's not this house; it's that house. Go over there." They're actually directing them to stay away from their house because there's people coming to buy drugs. Like I think I saw that. I didn't know that was the Lagrange one. Okay, crazy.
and that's but like that's the thing is like fine, you don't want to get them on that. How about we stop? How about we go in and notice that they have guns and are selling drugs and then arrest them on that.
Yeah, right.
Um, but and this is I will preference what I'm about to say with this because I'm gonna put down investing in Chicago, but I'm gonna say it this way: the price if you go to California or Ohio or anywhere else that is a hotbed for investing, what you pay for the house and what you get in rent are nowhere near the positive amount that you get in Chicago. Like our houses are undervalued and the rents are, especially on the south side, the rents are way higher than what you should be able to get for an equal valued house anywhere else. But the stuff that we have to put up with the city and with the rules and the squatters, the city, they create a law that says you can't judge someone based on their past history of criminal activity and things like that, which I totally understand. But then they'll also go and write you a ticket if your tenants are dealing drugs out of your property because that's your fault, even though you had to approve them because the city says you have to, otherwise it's a fair housing violation. So
Yeah.
yeah.
So I like how you worded that. And I always worded it as the pricing here in Chicago the market has the risk already baked into it.
Yeah.
So
Yep.
when we talk about taxes or we talk about potential risks of pensions or the stupid tenant friendly side of things or the squatter problems you're into or the stupid $300 fine, your price is baked into your risk level is baked into that price already. So, and that's super true. So
Yeah.
I do like that.
And again, I think, like I said, we're Chicago property managers and landlords, and et cetera. So we're talking bad about it, but as an investment, it's just you can't go anywhere else and buy $150,000 house and rent it for $3,000. It just, there's no other market. There's no other even take out houses. You can't go and buy a stock for 150 grand and make $3,000 a month on it.
Yeah, and
It's
that's where there's that opportunity. So even if that's where you have the opportunity to do even better than what suggested spread or returns are because you manage it well, or you put a good tenant in there, or you update it with the right updates to put the right tenant out. The whole thing is there just leaves with it being so underpriced compared to the rest of the market. Some of those things will adjust, and that will shoot prices up as well too. And I think we don't have the supply thing figured out anytime soon here. So they drop rates a little. They put a few 100,000 houses in there. Like those will adjust things, but it'll still shoot up based on pricing, based on demand and the ability for people to buy here. Because
I think the numbers on Chicago is we're like 2 million units short of what we need to house everyone efficiently, or how it's supposed to be. So yeah, there's nowhere there's no the working with the city of Chicago to put up new properties or to build properties is such a long process and such a hassle that that's not happening anytime soon. And then there's plans for the city to build as well. The stuff they're building it's crazy. It's like 100 units and it's like $100 million they're spending on it, right? Like they're they're not going to catch up anytime soon the way that they're doing things. So we're going to have a large inventory shortage for at least the next 10 years, probably longer. That's going to keep prices up.
Bellwood is the only suburb I've seen to do it, but I feel suburbs can do this. Bellwood actually built it was like 30 or 40 single family homes, reasonably priced. And, they sold them for some of the higher price points in Bellwood. But, and now they've moved on. They're building a multifamily senior home, which is a little more pricey. That some of it's getting subsidized, but their business, most time when these cities build, they have to subsidize a large part of it. And Bellwood actually had a fairly good model for their single family homes with their vacant lots. So, you think about, I know Schaumburg's done this in the past with lots that the school district has owned, but
Mm-hmm.
there are these lots within these cities where you could add properties, and if you do it from a business mindset, not you need union contractors for everything, and you need make sure 3/4 of people are minorities, all that type of stuff, which is great to a point, but it really slows down everything when it comes to these big problems we have to overcome.
I agree. I don't know if you saw who just commented though. Sorry, going back, but his ears I think were ringing. But I'm pretty sure it's Jarrett commenting.
Yes.
That just hopped on. So Jarrett, if you watch the replay, we were talking about Bitcoin earlier, and how you inspired us to buy it. And I apologize because I think me buying Bitcoin 3 weeks ago caused the meltdown. So
Well, it just shout out to him again. Marblestone is the only property management company in Chicago or the nation that I know that accepts Bitcoin as a form of you can pay your rent in Bitcoin, which is another crazy, amazing thing. So stack it up, boys. I love it.
no, but I mean it's buy the dip, right? That's what they say. And I think investing is the same way. Like, how many millionaires were made? Unfortunately, I was still in high school, but how many millionaires were made when everything crashed? And from 06 to 08, and the people that had money, after that buying stuff, that was the largest transfer of wealth I think in American history. So when things start to dip is the right time to buy.
Oh, huge opportunity. I was actually thinking yesterday, like, what would have happened if I didn't go through that? Because I took advantage. I took advantage of two things. I took advantage of all the loans that I shouldn't have been given before the market crashed, and made some money from it. And then I took advantage of all the cheap property out there when it did crash. So I'm super grateful. I know a lot of people went through bad times for it, but I had some, just trying to grow a business, and that was tough for me too. So we all kind of felt it in different ways. But I know, I think back, I could have easily just focused on trying to solve problems versus trying to grow. And I had a really good growth mindset. So yeah, a huge opportunity. And the funny thing is, through 17, 18, 19, so many people I talked to, like, yeah, no, I'm saving all my money waiting for the market to crash again. I'm like, you know what, man, in 2008, we were all in getting $10,000 back at closing. There's no way the market's crashing if you're saving money right now. So, but yeah, coming up to the end here, any kind of final thoughts for the week? Anything you're working on? Anything investors should be thinking about?
No, for all the guys out there, don't forget what Saturday is.
Yeah, I'm still
It's my
working on that.
one reminder, because we do forget sometimes. So scramble and get something for your lady.
See, my birthday's tomorrow, so I hate it. I have my birthday, and then I got to turn around and give a gift right back. It always it stinks. So
mine's mine's New Year's, so I get the I've always been shafted on gifts. Anyways, it's like I get the do you want my favorite is being a kid, and my mom would be like, so do you want like one big gift for both Christmas and your birthday, or do you want like two little gifts? I'll be like, oh, I'll take a big gift. And then the whole family would get like a big gift, all worth the same amount. I'm like, well, that doesn't count. I guess it's supposed to be bigger than this.
So I'll leave everyone on this final note. It's February, middle February right now. You might have tenants that have some sort of collection issue. Everyone's getting their tax returns filed here sooner than later. So make sure, if you have a tenant that's on a payment plan, build in there getting their tax refund back to be able to incorporate in their payment plan. So maybe get a chunk. I know every year March is our lowest collections month, because we're able to just kind of work with our tenants and get them back on track. And some of them just wait for that time of year too to get back on track. So as much as it's a grind to collect in December, January, February should be the month that you're able to make some ground.
Government reopened a couple weeks ago, so they should. IRS has their staff and their money, so they should be printing it soon.
All right, man. All right, everyone. Thank you very much, Tim. Thank you, listeners. If you are looking for a property manager, or you want to bounce something off to either one of us, we actually threw our website in here. And if you can inquire on either one of our websites, you can see on the bottom. You can message us here. You follow me on Instagram, Mark Ainley, REI. I'm always DMing back there. Otherwise, thank you. Check out Tim's. Tim, what is your podcast that you have?
So it's on the Chicago Style Management YouTube channel. It's also on Spotify. It's called the Landlording Show that we have. And yeah, we've been doing it for a few years now. So check it out. And like I said, hopefully in the next week or two, that Dorian episode will be dropping once we get the volume levels up, so you guys can all hear that conversation. But we're publishing every couple of weeks.
All right, Tim. Thank you. Everyone else, thank you. We'll see you next week.